Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Monday, March the 28th, 2011. Well, an outside day today, we have a candle that's made a high but a lower low, so we don't have any change of trend officially at this point in time. Previous days trading, we had a spinning top type candle, and that was a candle that was only just trading outside of the top of the cloud. Previously, we had a bullish breakout above the cloud, which is a bullish signal. The market continued with the trend to the upside, and today the market's closed back within the cloud. Now we can see how the market couldn't trade substantially above the cloud, and the cloud was actually moving up with the market as the market was trending up. So that's a significant thing about Ichimoku charts. The clouds offer themselves as support or resistance, and in this case it's dynamic and it can actually move to where the trading is. So now we find ourselves trading back within the cloud. Now today's candle is a red body candle, and quite a large red body compared to the previous day, and that denotes that the sellers have closed the market in control by closing down towards the low, and the red body means that the sellers have made some significant net bearish progress on the day between the open and the close. We can also see here, as the market attempted to trade outside of the cloud again, that the buyers lost commitment to taking this market higher. And we see a similar issue with the previous day's trading, where we were attempting to trade up above the cloud and we were only able to trade to close just at the cloud. Now in candlestick terms as well, this is also a potential bearish engulfing pattern, and that's where we have a prior uptrend, which is a prerequisite for any reversal pattern or a bearish reversal pattern. And then we have the body of today's candle, a bearish body completely engulfing the body of the previous candle. So that could be significant for this market. So we do need to watch the low of the current candle for a potential lower high and a lower low. This is also pretty much a tweezer's top pattern, where we have the two highs of these candles roughly around the same area, so almost two patterns in one here. Now in Ichimoku charts terms, obviously we're trading within the cloud again, so that slight bullishness that we saw in the market previously has evaporated, and that could be significant for this market. Now, by trading within the cloud, it means that the market is neutral in overall big picture terms. But the market is still trading up above the Kijun-sen and Tenkan-sen, which means that the market is bullish in the medium term and fast time frames. Now, that bullishness, however, by trading up above both of those indicators, is not confirmed by the relative positions of the Tenkan-sen and Kijun-sen. The Tenkan-sen is trading below the Kijun-sen, which gives us a bearish indication. So we're getting some conflicting signals at the moment. If we look here to the Chikou span, that's trading below the corresponding price action, and that is actually giving a bearish indication as well. It certainly doesn't confirm any bullishness that there might have been in the market previously, or it doesn't really confirm the neutral market that we've got in big picture terms as well. Now we can see here also that the Kijun-sen is flat, and often when that's flat, price action tends to be attracted back towards there, so there is a possibility that the market will be attracted back towards there. But previously we saw, when we had this harami pattern and the market retraced back towards there, that the market found support around there. If the market does come back, then there is potential to find support. The market previously found resistance around there, and if we come back, we could potentially find support around there, around 1296. If the market does come off, however, we do have potentially very strong support at the 1300 round number. That is a very big level for this market, and we should view it as a potentially very strong area of support. Now, anywhere through the cloud, if we do come off, is potentially very strong support, and that extends all the way down through to roughly about 1280. We also have potential support at the Tenkan-sen, which is at 1284. Now, if this market does continue to the upside, and we don't have a confirmed change of trend yet, we do need to bear that in mind. The market is still trending up because previously we had a higher high and a higher low. Today, in bar chart terms, we had a higher high but a lower low, which is an outside day, and a day of indecision, so no change of trend. But if we do continue trending up, then we may potentially have a breakout up above the cloud again. The cloud starts to turn quite flat, and then begins trending down after a couple of weeks. So there is potential for the market to become bullish in the big picture terms again. What we would prefer to see is a decent bullish close up above there for good confirmation of that breakout. Now, we do, however, have strong resistance to the upside, and there is resistance at 1324, 1332, and extending up to 1344. And this there is a good zone of resistance up to this 1332, where the market held up in quite a few areas, especially when we're trading within this symmetrical triangle that we broke out from a few weeks ago. So good, strong resistance overhead. So over the next trading day, we do need to watch the top of the cloud around 1317, 1318, and then the high of the current candle around 1319 for a potential higher high and higher low. But also watch the low of the current candle for a potential lower high and lower low, and confirmation of that bearish engulfing pattern.